So I got 5 stocks that I think are worth continuing to grab as far as a recovery play, and they don't have anything to do with GameStop or AMC. Stick around. What's up, everybody? Brad here with Own the Chaos. Stock market is crazy and chaotic, and I made it my mission to help you own it. So today's topic is going to be on recovery stocks. Now, recovery stocks that might come to mind to you at first is probably more like a GameStop or an AMC, right? Well, that's unless you've been watching this channel for any certain period of time. But I want to talk to you today about 5 stocks that I think are worth buying the dip on, worth actually grabbing because of there's so much upside still yet to come for these. And my first one is in fact going to be Delta Airlines. Delta Airlines has actually kind of been lagging some of the other airlines, and a lot of it has to do with the fact that this is an international play as well as a domestic travel play too. And in my opinion, it probably hasn't gotten the kind of love that it deserves, especially when you're looking at the way that Spirit Airlines and even Southwest Airline has gone insane. And so let's just compare this real quick. So we already know that the airlines are going to continue to build in demand. And if we're looking at the monthly chart here, you can see that there's still plenty of room for Delta to roll here. I think actually Delta will do even better than it was pre-pandemic at its $63.44 highs. But when we compare it to something like Southwest, for example, which we love, I love Southwest Airlines, and it is actually almost right where it was, actually a little bit higher than it was pre-pandemic, and really almost to where it was back in 2017. You look at something like Spirit, for example, as well, ticker symbol SAVE, and it is pretty much right there where it was pre-pandemic. And you look at something like Delta, because it's just not as popular, and it looks as if that it is struggling. But in fact, Delta Airlines probably has the better balance sheet out of all of these, say except for Southwest. Even American Airlines. You look at something like American Airlines, and this has even gotten back pretty darn close to its pre-COVID highs. Delta, in my opinion, still has plenty of upside and plenty of room to run. And if we look at the chart, you can kind of see what I mean there. Not only that, but Delta Airlines, the CEO, Ed Bastian, said that while the airline will pose a large loss in the current quarter that we're in right now, bookings have picked up in recent weeks, and he expects the airline to be at or pretty darn close to break even in March in terms of cash burn. And cash burn has been something that's been very, very scrutinized over this period of time where we've kind of had the airlines grounded, if you will, no pun intended. And looking at this, I think that this has just plenty of upside. So I love Delta Airlines here. The next one's going to be Royal Caribbean, and I actually like Royal Caribbean here because it, again, has plenty of upside. If you want a cruise line, this actually has the best balance sheet out of all of the 3 big ones, meaning Norwegian and Carnival Cruise Line. In fact, Carnival Cruise Line actually has one of the worst balance sheets and a boatload of debt. See what I did there? But Carnival Cruise, in my opinion, has a ton of, it does. There's not even an opinion about it. They do have a ton of convertible debt. And if you don't understand what that means, it's basically dilution of shares into the company. So that's something that you really want to keep your eye out for. And I think that Royal Caribbean, while they do have debt along with all the other ones, it's not as detrimental to its stock as it would be for Carnival Cruise Line. Not only that, but analysts at JP Morgan actually just upgraded this and gave it price targets of around $110 a share. I actually think that's pretty conservative. When you look at the way that this has been moving, and you look at some of the pre-orders on something like a Royal Caribbean, they're actually doing really well for whenever they start to sail again. Now, the CDC has been lightening up on some restrictions as far as COVID-19 is concerned, and we're starting to see that in the cruise lines as well. So far, the boats aren't moving until at least June, but pre-orders are really coming in here, and I like this a lot. It has been trading above its 200-day MA line, but if we look at where it's at from where it came from, there's still plenty of upside here. And with it trading right around $90 a share, you can see the upside here as it was at around $136 a share pre-pandemic. Now, there's been a lot of things that have changed since then, but demand, in my opinion, is going to probably be double, maybe even triple what it was pre-pandemic. So once these boats start sailing again, it's going to be a rocket ship for Royal Caribbean. Now, again, that's not to say that the other cruise lines won't start moving as well, but I think that the best upside with the best company is what we always try to go for, and Royal Caribbean, in my opinion, is that stock. And real quick before I move on, I just want to invite you guys over to check out the Chaos Crew. By clicking join next to subscribe, you get a daily watch list from us as well as access to our portfolios that we adjust and change every single day. So if you guys want to be a part of that, help support the channel and be a part of our Discord group as well, make sure you're hitting the join button next to subscribe. We would love to have you guys as part of the crew. Now, my next stock here is going to be Exxon Mobil. And I know a lot of you guys who have followed my channel for some time are probably going to raise your eyebrows at this because I am picking something that's related to oil. But Exxon Mobil has an excellent dividend yield. And, with them moving up like this and with demand coming back, I think Exxon has a lot of room to run here as well. When we look at the chart, it tells us the story. Pre-pandemic, this was trading at around $72 a share. Now, right now it's trading around $60 a share, so there's still plenty of upside here. But again, it goes back to my point about demand. It's not going to just come back to where it was before. It's probably going to double, maybe even triple from there. So I really like this stock for that reason. And that's not to say that I like this as a good long-term play. I think this is more of a short-term type of play. But when you talk about, well, we've just started talking about more boats in the water as far as cruises are concerned, more tubes in the sky as far as airlines, those all take what? Oil, right? They're going to take oil, and the demand here is going to be pretty extraordinary, I think. So in the short term, I like Exxon Mobil. I don't think that this is something that I would hold on to forever, but make sure that you keep that in mind. And really, this is all energy stocks. All energy stocks are going to continue to do well, in my opinion. I like Exxon the most because it, again, is probably the best company to own out of these. Marathon Oil is another one. It's actually a little bit cheaper if you guys want to check that one out. I think there's a lot of upside there as well. All right, so my fourth stock here is going to be one that if you've been following this channel for any certain period of time, you're probably already familiar with. But if you're visiting for the first time, you may not have heard about this one. And it is going to be Spirit Air Systems, not to be confused with Spirit Airlines. Spirit Air Systems is actually a company who builds fuselages and other parts for Boeing. And we know how well Boeing's been doing, especially with a lot of the purchases that we've seen from Southwest, American Airlines, and others for the new 737 MAX. Now, we've seen huge moves out of Boeing because of this, and this has actually been moving up closer and closer to its pre-pandemic highs of around $345 a share. Right now, it's trading around $255, so it's got about 35–40% upside here. So if you want to hold Boeing, that's fine, but I think something that has a little bit more upside is going to be Spirit Air Systems. And if we look at the chart here, I think this has potential to double from where it's at. As you can see, I actually have a position here, and I think that Spirit actually has more upside than Boeing. Not only does it have Boeing as a client, but it also has Airbus in there as well. Now, as you can see, it's actually trading well above its 200-day MA. But again, when we're looking at upside here and the demand that's going to be coming for air travel, Spirit Air Systems, in my opinion, is going to be a stellar play still, even after all of this time. And even after coming up from its bottom here at 18 bucks, there's still a lot of room for this to run, as crazy as that sounds. Okay, so last but certainly not least here is going to be Under Armour. And really, when we talk about the retail industry as a whole and clothing brands and all that stuff, the first ones that probably come to mind are something like Ralph Lauren or Kohl's or Nike, all that stuff. Lululemon also is in the athleisure conversation. And the reason why I love Under Armour so much is because they've been able to pivot from their crazy spending, especially in the collegiate side of things, and really cut that down during the pandemic. And now they are poised to continue to explode. The reason is because now sports are starting to become more and more popular. Again, kids are going to be going out and playing sports again, where we didn't actually have that last year. And so brands like Under Armour are going to become more and more popular. Sure, you could play Nike, but like I said, these are stocks that are flying under the radar that aren't getting the kind of attention like a Nike would at this point. Now, looking at something like Under Armour, I think that, in my opinion, there's a lot of upside here, even though it's starting to approach its pre-pandemic highs. And if we look at the chart here on the daily, I think it speaks for itself. Yes, it's well above its 200-day MA. Yes, it's well up there on the RSI as well. But what I will mention is that it is actually looking to start to break out. If I drew a resistance line here, and this is pretty similar to what I talked about with the financials. If you guys recall, when I went and talked about the financials plays, this had a pretty similar move. You can see that this actually came up here and touched the resistance right around that 1960 mark and did it several times pre-pandemic before crashing along with everything else. And then it did it again. When we look at this is actually really interesting stuff when you look at it from a chart perspective. This is breaking out, guys. It came up here and got rejected, tried it again, and then just over the last couple of days, you can see that it's just starting to break out on the daily chart. I think, in my opinion, that Under Armour probably is a $30 stock. At first, I thought maybe $25 was on the horizon for this thing. The more that I look at the chart, the more I like this, and I think that it is poised for a massive breakout. $25 isn't going to be the finish line here. I think that this gets up as high as 30. And so that's going to do it for me, guys. Let me know in the comments what you think about these 5. Are these ones that were on your radar, or weren't they? Did I do a good job of picking ones that you hadn't quite thought about yet? Let me know in the comments below. I would love to hear from you guys. And that's going to do it for me. If you like this video, give it a thumbs up and subscribe if you're not already. That's going to do it for me, guys. Thanks so much for tuning in. As always, I'll see y'all before the bell, and B Smith is out.